What is going on YouTube? It's Sank and we are back with another one. Now in this drop I'm coming at you with an update on a couple of plays to load up on, but before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. Now we have kicked off a fresh brand new week in the markets and it's good to see stability out there, all things considered. Because you guys know the last 2 weeks started off with these growth plays being dumped into the deep end. Now what I'm hoping for is that the market has taken a step back from worrying about inflationary pressures, just like it took a step back from worrying about daily fluctuations in bond yields just a couple of weeks ago. But as always, it's best to remain alert. Even though we had a good green day on Friday, stability today, the next headwind could be just round the corner. Now, as I say, I'm hoping for stability going through this week, but if we do get back on that roller coaster, we know how to tackle that head on. Now, to get you guys up to speed and in the right frame of mind to hit success in these markets, in this drop, I'm coming at you with an update on a few plays to load up on. So if you're interested in the stock market and you're looking to make money moves, I've got you on this one. So let's run the first one. So we're going to kick things off right with this one. That's ticker symbol BCRX. That's BCRX Pharmaceuticals. Now I'm going to put the spotlight on this play because on the day they're up a respectable 12% and on the week up over 20%. That's why I say there's no such thing as a boring day in the stock market, because you're either going to get those red days and that's just an opportunity to pick quality plays up on the cheap, or you're going to get plays flying, marking new territory like BCRX, or a combination of the two. Now hopefully this one's caught your attention by now. If it didn't, the last 50 times I spoke to you guys about them since we first picked this play up back when they were $7 in January. Now check me out. 52-week high on this one was 14.24. Today standing 14.39. This play's broken through all-time highs, marking new territory, making new ground. Now, in terms of game plan, you guys know when we hit these all-time highs on these plays, especially in this market condition, we're always looking for that pullback to make better entry on the play. So ideally, we want to grab this one in the high 11s, or we can start a position in the low 12s. This is one of these more volatile plays. If you check the stock price over the last 3 months, back in March, this one hit that $14 mark before coming back down below $10, but they are on an upwards movement. So best strategy, wait for that pullback. Now, BCRX is the only biotech play I have in the portfolio. Not only does that stock price speak for itself, last 3 months up almost 35%, but management do everything they can to hit every shot on goal. We know they've got FDA approval in the US, approval to sell in Europe, Japan, and just this week gone, UK as well. Now their last quarterly earnings they dropped just this week gone came in strong, and it shows they have the ability to steal market share from the current players with ease. So I'm expecting them to come out of the gate strong in Q2, Q3 and Q4 this year. Now there's been no news that I know of to push that stock price up today, so there's a question of can they sustain it at that level. So more the reason to be patient, to wait for this one to dip back down into the entry zone for you guys to load up on before the next climb in that stock price. Now the market could have chosen any of our quality growth plays to move up today, whether that's Grow Generation or DraftKings, but today was BCRX day to shine. Now, and let you guys know, with BCRX, they've got hidden ammunition in one of their pipeline projects that's not yet come to market, and that's not factored into that valuation or the current stock price. So if we can see momentum in that project, see it come to market, that's going to add further fuel to the fire on this play. Now, BCRX is one of those higher risk, higher reward types of plays, but it's managed risk because they've got that differentiated product, they've got that real world demand, and that clear strategy for scale up. Let's move to the next one. The next one I've got for you, that's Tesla. Now, this one's been on a rough ride recently on the week, down over 8%, on the month, down 22%. Now, the shortcomings we're seeing in that price today off the back of the Tesla Bitcoin stance and the ambiguity there. Now, the latest we know is that they're holding on to their position, but what's in the investors' minds is what's going to be happening in the short term. So the game plan with Tesla is to wait before loading up on this one until that price sees stability or momentum. When there's these external factors, these noise that get involved into a play, it's always best to wait for stability. Otherwise, you could see that price come down to a better entry point. Now, Tesla still remains a solid play that will benefit off the growth in EV and energy we're going to be seeing internationally going forward. And obviously the brand still holds its own, so it's a play to keep on your watch list. Now what I want to see happen is Elon make a detachment from crypto, mainly Bitcoin. He could still do his thing with Doge, but keep the focus on Tesla, get that price pumping again. Because what I don't want to happen is Tesla to get caught up in crossfires from a weakening Bitcoin and unhappy traders. Now, if you're in Tesla, just want to give you guys the heads up, potentially to expect volatility in this play. Now check this out. Today, this price dropped down to $562. Now, if we check out the 3-month low on this one was $563. So they dipped below that 3-month low. Now that is significant because this plane had their feet on the edge of the cliff today, leaning over. They managed to escape without any scratches, but just want you guys to know that over the next couple of sessions, do potentially expect volatility in this one. Now, what I want to see from Tesla is we know they can scale up those revenues, no problem. That's an easy job for them to do. But going forward, I want to see that path to increased profitability, those increased margins, get that net income number looking stronger in the next couple of quarters. All right, so those are the plays I want to bring to your attention. Now, food for thought of the day is, as we move forward, you guys continue to build out and diversify your portfolios. Add some quality in there by adding plays that are going to benefit in an inflation environment, plays that are going to benefit from economic reopening, and those cheaper plays where the multiples are much lower. Giving you guys several, such as an SLM, an Alcoa, a Wells Fargo. Now check this out. 52-week high on Wells Fargo was $47.35. Today, the play broke through that 52-week high, hitting $47.90. As I say to you guys, the way to win in these markets each and every day is just ensure you've got a diversified portfolio full of quality. So if you've been rocking with the channel, you know what time it is. Question comes from Leveling Up, says, hey Sangi, how you feeling about Mara? Would you say it's a buy at the current price of 23? Obviously just your opinion, please. So let's dive into this one. Now, even if you're not looking at this play, but you're looking at any other play in the market at a certain price, you can still use what I'm about to tell you, apply that, and help you with your investing decisions. Now, as you guys know, in the last drop, I said, when you're jumping into a play, you've got to ask yourself, what are you getting for your investment? And the first thing to look at is the valuation. With Marathon, that's always been an overvalued play. Now, even if Marathon was to drop down to $10, it would still be an overvalued play. I want you guys to know, if you have a stock that's $100, even $200, that can be a cheap play when it comes to its valuation. And even if you have a stock that's $1 or $2, that could be an expensive stock. It's all to do with the valuation. So hopefully you guys understand that. Now, also, you've got to ask yourself, what are the drivers? With Marathon, the key driver is that momentum in Bitcoin. But right now, Bitcoin is in the trenches. So that's why I say Marathon is always one of those short-term plays. Ride the wave as you see momentum in Bitcoin. And if there's no momentum, use a stop loss to cash you out of the play. So these two things combined, the fact that it's an overvalued play, and if you have an overvalued play, do know that the price can come down significantly. And because we know Bitcoin is in deep waters right now, Marathon is a no-go. Now, if we did see a resurgence in the price of Bitcoin and interest in Bitcoin miners, then things might change. But for now, it's one to keep in a watch list somewhere. So that wraps up for this one. If you'd like to help out the channel, do hit the like button and do drop down some questions and comments. I want to say I appreciate you guys, and I'll catch you on the next one.